But first, I just want to give a couple updates on our end, and then I'll pass it over to Mark to introduce Eric, our CPA, who will be speaking today. So we've received a few questions about the Run House assets that we talked about last week. So stay tuned. We will be deploying these in the next 2 weeks, and we'll communicate to you how that will be done shortly. So for people asking, that is coming. I know Rita and Ryan are working really hard on the designing of those right now, and really excited to share them with you. And then I think you all are familiar with Bethany. Bethany Gilpatrick is our marketing manager for the running event and Running Insight and Best Running Stores. And I'm going to let her share a couple updates on our end of resources that we have now that you may or may not be aware of. So Bethany, over to you.
Yeah, sorry, it was taking me a second to unmute there. Hi, everybody. As Christina said, I'm Bethany, for those of you who don't know me already. And just wanted to let you guys know that we do record these calls each week. So just in case you wanted to share them with either someone from your store that couldn't make it or another retailer that you know couldn't make it, we do have these recording, and we post them maybe like 1 or 2 hours post-call on runninginsight.com and on the helpful resources page. And there we have a whole list of other things that hopefully you will find helpful, especially all of the small business loan questions and resources for that. And we continue to update it with things that we hear from you that might be helpful to you. So kind of on that note, I will include the link to that page in the chat feature. And then I'm also going to include my email, because I would love to hear from you, and I know that we would love to hear from you if you have any questions, comments, concerns, ideas, feedback, anything that could be helpful for you as you navigate this weird time. You know, we are here to serve and support this amazing industry and community of people. So please feel free to reach out to us. Again, we're here for you. And so I'll include the link and my email address, and hopefully we can all connect in person someday soon. So I'll include that shortly. Thanks.
Perfect. Thanks, Bethany. And to that point, so she's going to post in the chat. I think you all know the drill. You know, feel free to send any questions in the chat for everyone to read, or privately, however you prefer. So without further ado, I'll have Mark introduce Eric.
Okay, Eric is somebody who's new to our group. He's new to our group, but not new to our industry. I became aware of Eric through Patton Gleason, who some of you guys may know. He runs a company called Relay Returns that works with a bunch of different run stores. He's got an interesting model, and he introduced me to Eric. I guess Eric is his part-time or fractional CFO, I believe is the official term. But he's very familiar with our industry and very familiar with small businesses. And he has been our one of our behind-the-scenes resources throughout these calls. And we're happy to bring him to the front of the scene. And I think Eric's going to start off by giving us sort of an update on what's going on with the government aid, or what's not going on with the government aid, might be more appropriate. And then he is going to be kind enough to handle any questions that people want to ask, either through the Zoom call or by hitting the chat device and sending those to either Christina or Bethany. So Eric, you want to take it away?
Sure, Mark. Thanks. Can everybody hear me okay? Hopefully that's a yes. All right. I'm going to hopefully can you see my screen?
Yes.
Okay, great. So anyway, so thanks, Mark, for the introduction. So again, my name's Eric Glymph. I own a company called Edge Business Planning. As Mark said, we do fractional CFO work for small businesses I'm based in Richmond, Virginia, but we do a lot of work with businesses of all sizes and industries throughout the country, mainly helping them focus on looking forward in their business and working with their accountant or tax person instead of just looking backwards, looking forwards. I am a triathlete, so I've been very involved in running, swimming, biking for over 10 years now. I think it's 13, 14 years I've been doing triathlons. So really excited to join this call and talk to you. I've sat in on a couple of these the last couple of weeks just to kind of listen in and see how things are going. So it's really a great group. And I know obviously it's a challenging time for a lot of people. And so it's great that everybody's working together and kind of thinking through these different things that are going on. So what I'm going to focus on today is just talking about the federal stimulus programs for small business, mainly the Paycheck Protection Program and the disaster loans. I'm assuming most of you have either applied for or considered applying for or have actually received money in these programs. So I won't spend a lot of time talking about the details, but certainly happy to answer any questions that we want as we go through this. So mainly I'm going to talk about those at a higher level, really kind of give an update on where we are, what we're waiting for, what we know, the latest updates around this, and really some more discussion around, especially for those who've gotten the Paycheck Protection Program, how to maximize that whole loan forgiveness part of the program. And so that, because that's a big area, obviously, for a lot of people. And so if you have any questions as we go along, I'll probably pause from time to time to take questions either through the chat or if you want to unmute, we can do that as well. If we have a little bit of time at the end, I'll kind of talk through some key points around just kind of thinking about, preparing yourself both operationally and financially and planning in a time of uncertainty, and some key points I have around that as well. So, okay, so let's jump ahead. So I'm throwing in a few definitions here, and I did provide this slides to Mark so he can send those out to everybody or post them on their website. These are free for you to use. Just hit on a few definitions here just because there's a lot of different acronyms and things like that. The main ones are the SBA, which is the Small Business Administration, the EIDL, which is the Economic Injury Disaster Loan, and the PPP, which is the Paycheck Protection Program. Okay, so we've got the three main programs. The EIDL, that's the Economic Injury Disaster Loan. So that's the loan where you get the emergency grant part of that, up to $10,000, $1,000 per employee. And then there's also a long-term loan aspect of that, up to a 30-year loan provision that's in there. So that if you applied for the emergency grant, you also applied for the long-term grant as well, the long-term loan as well. That is directly through the SBA. And you would have applied through the SBA website. The next one's the Paycheck Protection Program, which is the one that's kind of gotten all the news that everybody's kind of been applying for. And that's where it's through the SBA as well, but you work through your local banks to get that approval and funding for the Paycheck Protection Program. So that is funding basically to cover your payroll and related costs for 8 weeks after you receive the funding. If you do that the right way, maximizing your number of employees, maybe even rehiring employees, you can get up to 100% loan forgiveness on that. There's a lot of questions and gray areas and things we're waiting on answers from the Small Business Administration on, but that's generally what that program is about. And I know a lot of you have been involved in that process. The third main one is the payroll tax deferral, and this allows employers to defer their employer Social Security tax, the 6.2% you pay on their payroll. Allows you to defer that amount for the rest of this year, and you don't have to pay it back for 2 years, half of it in 2021 and half of it in 2022. those are kind of the three big programs. So let me talk about a little bit around where we are, today, what we know right now. So last week, both programs, the PPP and the EIDL programs, ran out of money. So the PPP had $349 billion that was started on April 3rd, and they ran out last week. And same with the disaster loan money ran out as well. So there were additional funding was provided, and that was put in place on Monday. So Monday, the second round of funding for the PPP began. So that's another $310 billion. So what has happened is a lot of banks were continuing to take applications during that about 5 days of time where the funding wasn't available. So on Monday, when the system opened back up, it pretty much crashed almost immediately because so many applications were going in there to get funded. But with that being said, they've worked those things out, so that process is moving through and plugging along. One thing they did do was allocate $60 billion to smaller banks and credit unions, so banks that were much smaller in size than the big banks, because they basically said, look, in the first round, there's all this media and press about these big public companies getting these large PPP loans, which some of them have given back. But they were like, we want these smaller banks that are working with these small companies to have funds to help them. So they allocated $60 billion of this to smaller banks and credit unions to help them specifically be able to help smaller businesses such as yourself. Now, for the Paycheck Protection Program, we are awaiting guidance from the SBA on the loan forgiveness process. So, as we said, the loan forgiveness starts the day you receive your funding, and you have 8 weeks to maximize that loan so that you can maximize your forgiveness around that. The main things are you got to maintain your number of full-time equivalents, your number of FTEs, and you have to also make sure that no employee has their employee costs drop more than 25%, and you have to use 75% of your PPP funds on payroll-related costs. So there's a lot of questions about timing, what the 8-week period really covers, especially if you have a payroll at the beginning or end, those type of things. So we're still waiting for a little more guidance on that, and we'll talk about that in a minute. And then the other thing that was clarified last week was that you can, if you want to use the payroll tax deferral program, that's where you can defer payroll taxes until next year. You can do that as well as use the Paycheck Protection Program. How it works is until the date that you receive from your bank that your loan is forgiven, you're allowed to defer your payroll taxes. So what that means is basically for the next 8 to 10 weeks, you can defer your payroll taxes if you choose to do that. You would work with your payroll provider to do that, but you can do the PPP and you can do the payroll tax deferral. Jumping to the economic injury disaster loan, the EIDL, the second round of funding began on Monday. However, the SBA did not reopen applications. They basically said, we're still processing applications that we got in the first round, and we're not reopening at this time any additional applications. We're not accepting any new ones. So if you did not apply for this in the first round, right now you can't apply for it in this current funding round. They may open it again, but right now they're pretty much saying they're not. My guess is it probably won't, only because they are running about 4 weeks behind. So they're currently processing for the long-term loan part. If you applied on March 25th, that's basically the date they're working on as we speak. So they're about a month behind on processing the long-term loan part of the EIDL. Now the grant part, the emergency grant part, is only taking about 10 to 15 days. That's the when you filled out the application, if you stated, hey, I need to, I want to get an emergency grant of up to $10,000, it's usually taking them about 10 to 15 days to fund that. I get a lot of questions from people. They say, how do I know where I am in this whole EIDL process? And my answer is, nobody knows. The only way you know if you got your emergency grant is if it shows up in your bank account. You don't get an email, you don't get anything like that. You will receive an email when you're approved for the long-term loan. You'll get an email saying, hey, you're approved, go into the portal and check out your loan amount. But there's no way to find out where you are in the process. You can call the SBA, but the people there are very nice, but they can't look up specific loan amounts and see, or loans for specific companies and see where they are in the process. They can only kind of talk in general terms of where they are. Okay, I'm going to stop there for a minute and see if anybody has any questions.
Eric, we do have a question. Does anyone know how you will show decline in business in order to get the loan forgiven at the end of the PPP?
So good question. They have basically stated that right now, and when you filled out your application, you had to certify that your business has been impacted by the COVID-19 impact. They haven't really, they've kind of tightened up a little bit of the requirements recently, basically saying, hey, if you're a public company and you have access to other capital resources, you shouldn't be applying for this loan. But they've been pretty open and lenient in saying that, I don't think they're going to specifically require you at loan forgiveness. What may happen is someday in the future, they may come back and do an audit and ask you about that. The reality is they've kind of said they're really going to focus on loans that are greater than $2 million. They're for sure going to scrutinize those closely. Anything below that, probably be samples here and there, but mainly you just have to feel comfortable that, hey, my business has been impacted, which I think pretty much all of ours has in some way. And that you do a good job of tracking the expenses related to the loan.
Okay, if there are no more questions, you want to keep going, Eric? Any other particular comments you have or things that you think are important to talk about?
Yeah, sure. So let me just hit on a couple other things. So people ask, like, what's this money for is one, and then, how do I use it? And so this next slide kind of shows, so the grant is the gray bar. That is that initial funding you might get from the disaster loan that you apply for. These days, some people are getting their PPP faster than the EIDL grant, but the EIDL grant is a short-term, it's between $1,000 and $10,000. So depending on the size of your business, that might last a week or it might last a couple months, but it's a pretty short-term piece of it. And then the PPP, again, that's really to cover an 8-week period. That's the main thing. You want to focus on the 8-week period that is going to cover. And then if you get the long-term EIDL loan, the idea around that is to cover approximately 6 months of operating expenses. Now, I've heard some people who've gotten the EIDL loan, and some people have gotten 4 months, some people have gotten 8 months, but generally, kind of rule of thumb is, it's supposed to cover around 6 months of operating expenses. Now, that may get changed based on the formula and funding maybe declining a little bit. But you can kind of think of that as more of a long-term funding option if that's something you want to do. So again, both the PPP and the EIDL are both loans. So make sure to think about that. The PPP is a loan. It's a 1% 2-year loan that if you do things right, it could be forgiven, 100% forgiven, hopefully. The EIDL loan is not a forgivable loan. It's a 30-year loan, 3.75% interest. You can prepay it, so you can pay it off early, but it is a loan So it's something you want to consider in your business based on maybe what your other debt structure is, or maybe some things you're thinking about doing in the future, because there's, it's definitely still, and what your personal, feeling is around taking on additional debt in your company.
Okay, Eric, two more questions. One, do you expect any significant change in the guidance for forgiveness criteria?
So yes, I expect there'll be a lot more specific. The guidance is right now has been fairly general. So there's a lot of questions that people have. So I expect that, and that's one of the things that banks I've been talking to, and a lot of us in the industry have been pushing the SBA to say, look, people are 3 or 4 weeks into their PPP, management of this, and trying to track the activity right. And there's a lot of things that people still have questions on, especially around what does, the number of employees, and then the reduction in the 25% reduction in salary. There's a lot of questions around that. So I expect there's going to be a lot of, I wouldn't say significant changes. There's a lot of clarification for a lot of things that are very vague at the moment.
Okay. And speaking of employees, another question, Eric, any thoughts on the employee retention credit?
So the employee retention credit is can be a good option. And let me jump ahead. I've got a slide on this, like way ahead here, but so the employee retention credit. So the first thing is, if you're getting a PPP loan, you can't get the employee retention credit. They're two separate things. But the employee retention credit allows a business that has seen either you have to meet a few criteria, but the main criteria are: one, you are required to close or suspend operations due to orders from a government authority. So if a government said, you're a non-essential business, you must close, you would qualify for this. Or you've seen a significant decline in your sales, greater than 50% compared to the same quarter of last year. So if you meet those, then you can get this employee retention credit. And how it works is it gives you, for every employee you have, basically up to a $5,000 credit. So basically what they say is any employee maximum is 50% of their salary, but the salary is only up to $10,000. So basically you're getting a $5,000 tax credit for each employee in this program. And how it works is you compare it from the last quarter to this quarter, and if they meet that, then you can take the pay that you would pay that person and deduct it from any payroll taxes that you owe at that point. So basically you're getting almost an immediate cash infusion from that. And the good thing is that even if you don't have enough tax credits, so say you pay 2 or 3 employees and the total is $12,000, and you only have $9,000 in tax credits, payroll tax available to offset that, you can immediately apply to the IRS to send you the additional $3,000 that you owe. So it's actually a direct dollar for dollar tax credit. So it's actually it can be a pretty good option for businesses who have been pretty much completely shut down. So you've got to have seen almost a very significant decline in your sales to do that. And again, you also, if you're using the PPP, you can't take this credit.
All right, I think you covered some of the next question, but let me ask it anyway. You can just clarify a little bit. So does it need to be the same employees who stay on the payroll? Whoops, somebody scrolled on me and knocked that question up a little bit. Does it need to be the same employees who stay on the payroll? We may bring on people with different skills for the next couple months to get the most out of the PPP money. For example, we may leave some part-timers on unemployment, but put a contractor on payroll, such as our bookkeeper, to get the most out of the PPP. I know that somewhat defeats the purpose, but just curious as to what the rules are, so we can make sure we stay compliant.
Yeah, so this is one of the big questions. It's a very good question. So if you read a lot of the interpretation that I've read, and a lot of people are interpreting the law as saying that you have to look at the 25% reduction in salary on an employee by employee basis, which means that if you had Jane working last quarter and now you hired Joe to work this quarter, that would mean that that actually doesn't count. You wouldn't get full forgiveness for that. You would have to reduce your loan forgiveness by that amount. So in that interpretation, you wouldn't be able to hire somebody else to replace that specific employee. There's another interpretation out there, and if you read the law, it seems to lean that way. But a lot of people are like, that doesn't seem to be really a good intent of the law. So the intent would be, hey, if I can get people working again, even if it's not the same people, I should be able to get full forgiveness. So that is one that is a very big question. That's probably one of the biggest questions out there because, again, people are making decisions on hiring people or not hiring people based on that. And so that's one of the big questions that's out there that we really are still waiting for guidance on.
Yeah, and here's not so much a question, but a comment. Somebody writes regarding the PPP and contract labor, including consultants. It counts as labor as part of the 75% of the loan that goes towards payroll forgiveness. So does that make sense, Eric?
So no, only W-2 employees count as payroll costs. So if you're paying a contract employee or a 1099, that doesn't count. That's not a payroll cost because technically those people can go apply for their own PPP or unemployment if they want to.
Okay, well, again, that's a pretty specific point, so maybe that's something that we want to follow up on. At the end of the call, anyone who's interested, I'm happy to share Eric's deck. He was kind enough to send it over to me. And then if you have specific questions that relate to you or your business, probably makes sense that you follow up with Eric directly.
Yeah, but yeah, okay. But yeah, that is a really good point. It really is just W-2 employees. So okay. Any other questions right now, Mark?
No, not right now. If you want to keep moving along. Okay.
So let me just hit real quick on how all these work together again. So you can get SBA disaster loan, the long-term loan. You can get the emergency grant. You can get the PPP loan. You can get all those together. The emergency grant does not need to be repaid even if you're denied the loan. So if you, for example, you don't apply for the PPP, you just get $5,000 emergency grant, you decide you don't want the long-term loan, you get to keep that grant, even if you're denied a loan. As I mentioned, the PPP loan forgiveness is not guaranteed. You've got to maintain payroll, you've got to maintain your head count, you've got to track all your activities for an 8-week period after the loan origination. And again, we're waiting for some more details on that. The PPP loan forgiveness is reduced by the EIDL grant. So if you do get an EIDL grant, your loan forgiveness will be reduced by that amount. So for example, if you got a $50,000 EIDL loan and you got a $10,000 grant, the most you're going to get forgiveness is $40,000. Because you think about it, you can't really double dip. They're giving you this $10,000 up front. You can't, get another forgiveness on that a second time. So they're giving that. So you will have, so what we're recommending to people is if they do get a grant and they do get a PPP loan, to kind of put that grant off to the side unless they really need it, and then use that to pay off any remaining PPP loan they're going to have at the end, because they'll at least have that amount that they got from their grant. 75% of your loan amount must be used for payroll costs. Payroll costs include salaries, wages, benefits, cash tips are included. So if your people make any cash tips or anything, and employer paid benefits. So employer paid group benefits. So individual benefits paid to an owner don't count, but if you have group benefit plans, that you pay your employees, the employer paid benefits count for that as well. Make sure you keep detailed records, payroll registers, rent, utility bills, mortgage interest, that type of stuff. Make sure you keep good records of those. And as I mentioned before, if you do use the PPP loan, you can use the payroll tax deferral program up to the date that your loan forgiveness is approved by your bank. So you can defer payroll taxes at least 8 weeks, if not maybe a little longer. Again, that's a deferral. You still have to pay that part of it back. But that is, if you need something to help with short-term cash flow, that can help as well. Okay, I'm just going to hit a little bit on the loan forgiveness again. Loans may be forgiven up to 100%. 75% of the loan must be used for payroll costs. You must provide documentation. Mortgage interest is eligible, but not the interest paid on any existing debt, just mortgage interest. And the loan forgiveness is not taxable income. However, what we're waiting for guidance on, in normal circumstances, usually the IRS says if something is not counted as taxable income, then any expenses related to that are not deductible. And so we're assuming that's what's going to happen here as well, that, if you don't have to record, this isn't taxable income, but any of the expenses you used against this loan wouldn't be business deductible expenses either. So it's kind of a wash at the end of the day, unless they come out and just be very generous and allow you to deduct expenses as well. Okay, I'm just going to hit on this real quick. Just tracking. So how do you track this if you have a PPP loan? A couple options. One is you can set up a separate bank account. A lot of banks are requiring or requesting that you set up a separate bank account to put this loan money into. We also recommend that whatever accounting software you're using, you track it through there as well. So maybe you set up, if you're using QuickBooks, you set up a separate class, call the class PPP or call the class EIDL, so that you can track every specific piece that goes with it. We are not recommending that you shift your payroll. Some people have said, well, I'm going to set up a bank account and then I'll just move my payroll bank account. I'll have my payroll come out of my PPP bank account. We're not really recommending you do that, only because not all parts of the payroll are fully deductible. Only the gross salaries, only employer taxes. So you're going to have to shift some money around anyway. So it's best just to leave your payroll where it's coming out of now, and then just move the money that you're using out of one account into another. So you'll want to keep track of payroll records. You want to keep track of, if you make a rent payment, again, these are business rent payments. Keep a copy of your rent, mortgage statement, some sort of invoice or receipt. A bank statement will probably be okay. The bank may ask for something to prove that the rent or lease that you're paying on was in place before February 15th, because that's the requirement. You can't just start paying on a new place in March. It's got to be something that's already before February 15th. You can also track for utilities, but rent and utilities have to be less than 25% of your total loan usage. Okay. All right. Talked a little bit about payroll tax deferral. I won't hit on that again. Mark, are there any other questions pop up?
Aha. Yes, absolutely. One question came in. Do my full-time employees only need to be up to full steam by June 30th? I thought our forgivable amount was reduced based on the monthly average of FTEs during the 8-week period.
Yeah, so another really good question. That's another one that we're waiting on guidance for, because the law says if you rehire your people by June 30th, you don't lose your forgiveness. But then the question is, well, if I rehire them on June 30th, does that, in the law says I don't lose my forgiveness, but one, I didn't pay them for the quarter, so there's no dollars there. And two, does that impact my average FTE calculation and lower it down to a point that's going to hurt me? So that is a very good question. That's another one that we're waiting for the SBA to kind of say, this is how this is really going to work. Okay. So I just want to hit on one last thing real quick, and it's really around less around the federal programs themselves, and just kind of thinking about as you're looking forward in your business and deciding, okay, what are the things that I need to do to maintain my business? And I know a lot of you have already been doing this. I mean, you're all seasoned business owners. Some of you have been through economic tough times before. And so many of you are probably look at these and go, yeah, I'm already doing these, and that's great. But I thought it'd be good to just hit on those real quick. Kind of these cash flow keys to survival. First one is manage your expenses closely. So I think that's pretty clear. You want to look at those expenses, and as I say, no expense is too small, because you probably realize over time, like, oh, I'm just going to spend $10 here and $20 here and $50 here. And next thing you know, you're spending $1,000. As I say, death by 1,000 paper cuts, right? You got all these small amounts that just add up. So many times you focus on those big amounts, but also take a look at your small amounts and make sure you can manage those expenses closely and understand what's going on there. Second is manage your customer receivables. So people owe you money. It's always good to work with them and collect the best you can. Certainly in this time, it's a little more challenging, and the quicker you can get out ahead of that, the better. Make sure that you might give incentives for customers to pay early if you've got customers who maybe owe you some money, or set up payment plans or that type of thing to help them get that paid beforehand. Manage your vendor payables. So this one seems simple. You just say, well, I don't have cash, so I'm just not going to pay anybody. But you really want to prioritize your key vendors and make sure the ones that are critical to your business, you're making sure to understand what the what their situation is. Make sure they understand what your situation is, and make sure you can work out a good arrangements with them that you keep the key products and services flowing, and then work with your other vendors the best you can to, you may have to push some out. The more you can be in communication with them, the better. The fourth one is know your break-even point. So what does this mean? Basically, the break-even point is I don't have any revenue coming in. What are those fixed expenses that I have to cover no matter what? Rent, utilities, maybe specific certain salaries of people, those type of things that are going to be expenses that are going to be there whether or not you've got money coming in the door or not. So you have to know, hey, at minimum, I need $10,000 a week or $10,000 a month that I need to make sure I have at least that much cash coming in the door. So knowing what that break-even point is a good indicator to make sure you at least understand what the kind of the floor is of your business, and what you need to kind of keep keep things moving. Monitor cash flow frequently. So a lot of people ask me, what's the best cash flow system I should use if I want to track and monitor my cash flow? And my answer always is whatever works best for you. Some people really like sophisticated cash flow modeling through Excel or some of these online tools that are available. And some people just like to have a pencil and paper and scratch pad and be able to do it that way. And especially this time, I always say whatever works for you is what you should use, because if you are using some sort of tool that isn't helpful to you or you don't know how to use it, then that's not going to help you. So find that cash flow system that works for you and look at it frequently. In times like this, you can't defer this cash flow management to anybody else. You really have to work on it and do it yourself. And the last one is anticipate cash flow needs. So the best you can do to look forward in your business is say, what are those things coming up that are going to impact the business? and anticipate those, the better it is. And that'll lead to my last slide here is that I've had discussions with a lot of business owners about talking about how do I forecast how do I determine what's really going to happen when there's so many unknowns. And what I really talk about is you can't have one plan. You can't have one forward-looking plan. You have to look at some different scenarios. So think about some of you are getting ready to reopen. Think about, what if I reopen and business recovers at, recovers 30% of what it was? What if it recovers 70% of what it was? What if it recovers 100% of what it was? And look at maybe some time frames on when that would happen. Maybe over the next 2 months, 3 months, 6 months, and sit down and talk about, okay, how does that impact my business? What does that really mean? How does it impact how I bring back employees? How does it bring back how I order product? What is the cash flow I have to do that? So really look at those resources you need. And there's really you can't really do it, just say, I have one scenario. In this type of environment we're in now, you've got to look at 2 or 3 or 4 scenarios. I wouldn't do 10, but 2 or 3 or 4, I think, is a good number to look at as you're kind of, planning for that, for the go forward in the future of your business. Okay. Ooh, that was a lot.
That is a lot. I really appreciate it. Thank you. So I think our goal today was these calls typically have been running for about an hour, and we were hoping to make this one less than an hour. So maybe what I'll do, Eric, is if it's okay with you, I know you sent me over your deck. Anybody wants it, just reach out to me or Bethany or Christina, and we'll make sure you get it. And that has Eric's contact information on it as well. So if you need to reach out to Eric for individual questions, he'll work with you on that.
Yeah.
So any other questions before we start to wrap it up here? I'm going to take that as a no. Bethany and Christina, I'm going to throw it back to you. I know you want to talk about the ad campaign that's in the works. And if you want to wrap up any other loose ends, the two of you guys.
I don't know where Christina went, but we certainly will have, again, this video recording up on the website on Running Insight. And then we'll make sure that we include a link to Eric's presentation there as well. And again, just to reiterate what Christina said, we will definitely be letting you know about the collaboration with Run House and the digital assets forthcoming there. So we'll have more information on that, and we'll let you know as soon as we have it all pinned down. So I think that's it from us.
All right, excellent. Yeah, so just the timeline, Bethany, I think next week, is it next week you're going to do a webinar and walk everybody through it, and then the assets will be available around the 15th? Is that what we're talking about?
We will be doing a webinar right now. We're slated to do a webinar on the 15th, actually.
Okay.
But we'll let everyone know via email from Running Insight what the exactly what time, and then also where they can find the digital assets once that's done, because we might have those launched right before. So we're talking through the exact timeline, and we'll let everyone know.
All right, excellent. Thank you, Eric. Thank you, Bethany. Christina, I see you. I don't hear you, but I see you. So
I was on mute. I think you can hear me now, hopefully.
Yes.
But yeah, thanks everybody, and we will talk to you soon.
All right, Eric, thanks a lot. Anybody needs the deck, just reach out and we'll get it to you.
Great. Thank you.
All right, bye guys.
Bye.